Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, COP28 draft agreement drop phase out of fossil fuels, as well as that the EU's new AI Act risks hampering innovation, warns Emmanuel Macron. We've got lots to talk about on the charts also, with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. But of course, the first article to talk about is COP28. Now, a draft agreement of the COP28 summit has dropped all pledges to phase out fossil fuels. Now, this comes as nations accuse petrol states of thwarting efforts to tackle global warming. Now, the COP28 agreement is currently the COP28 conference, is currently taking place. It started, I believe, around the end of November, and it's now continuing as we speak. It's set to end around mid this week, maybe a bit later, but we're expecting to see once again another agreement from this conference. And previously we have heard other sorts of pledges around net zero from different countries, different plans to how we'll achieve net zero, how fossil fuels will be used differently, how they'll be phased out. But really what we're hearing here is, we've kind of had these issues over the past year or so in relation to fossil fuels in particular, ever since really the Russian invasion into Ukraine. In the West, at least, we've seen that kind of issue of oil prices rise and causing that level of inflation, as much of European oil was coming from Russia, or at least involving Russia as a supply route. Therefore, many kind of fell back to the kind of support for fossil fuels within Europe. We kind of saw that on the rise within the UK itself, but also in Germany and other nations where kind of fossil fuels had been kept on the low down. There'd been a real drive seemingly to focus on net zero techniques and green kind of energy production methods. But seeing that kind of damage to the oil supply led many to call for once again the use of fossil fuels in different manners, such as coal plants, and other sorts of extraction of oil domestically, such as fracking, and that's been a key point of contention. And now we're seeing in the COP28 agreement, in fact, certain petrostates, obviously calling for the reduction, or at least the less kind of harsh rhetoric in relation to phasing out fossil fuels, and maybe taking a more kind of lenient view on how fossil fuels may still be integrated within the global economy, which would obviously benefit these large petrol states. And mainly what we've been talking about in relation to petrol states most recently is their issues around the oil prices at the current levels that they are. After all, previously on the year, we were talking about oil reaching new highs, but now we're actually talking about oil potentially reaching some new lows. And so many of these states, such as Saudi Arabia and Russia, which have recently met, who were initially trying to achieve that $100 a barrel oil price, are now in a difficult situation where their oil revenues are obviously dropping with those lower prices, and so they're working together to try and find a way to keep those prices high. But obviously, coming into an agreement like this, which is based out of Dubai, many individuals, or at least key petrol states, are going to be calling for the use of fossil fuels to maybe be extended in the timeline of the future, I guess. But the document will be agreed on by near 200 countries and sets out a range of actions that countries could take, and this would be to cut greenhouse gas emissions to net zero by 2050, including the reduction of consumption and production of fossil fuels by 2050 in an achievable manner in order to achieve net zero carbon emissions. Now, this is against what a large number of countries want, which is to completely phase out fossil fuels by the date of 2050, for example. And what we're hearing from this draft agreement, in fact, is these key petro states are really wanting to hold on to the kind of fossil fuels which they have and are willing to export and kind of drive their entire economy. They want to make sure that they're going to be able to do that for quite some time, and they're not quite happy with the idea of that being completely phased out by 2050, which is what we're seemingly seeing here with that draft agreement not looking to completely phase out fossil fuels. So far, this draft text has received fierce opposition from the EU and the UK on the matter. And as we know, even the UK has had their own issues with fossil fuels in relation to, completely phasing them out. We've recently seen with Rishi Sunak, kind of moving back on previous commitments to, only have renewable energy using cars and that sort of thing. And these sort of walkbacks, once again, these issues in relation to what we're going to do to achieve net zero is still a point of contention. But the point is all these key states that although they may have their small disagreements, the ultimate message still is the same, that they want to achieve this net zero, this phase out of fossil fuels by 2050. And the issue is this agreement doesn't make that clear. Ministers from around the world have accused Saudi Arabia of shifting the focus of any agreement away from fossil fuels by pressuring COP28 President Sultan Al-Jaber. I may have pronounced that wrong, I'm sorry. And considering fossil fuel burning accounts for 3/4 of emissions, this is seen as a very regressive move by Saudi Arabia, simply motivated by profit. And this is something that, creates another level of issue for individuals around the world. Is this when it comes to this issue of global warming, of net zero, and of these kind of COP28 conferences and that sort of thing, is when you come into these situations of different actors having their different interests, with the topic of interest here being those key oil exporters not wanting to lose out on that large flow of income, and therefore wanting to extend that despite the possible damages to the environment that might result in. Now, the UK, EU and US all said the wording on fossil fuels should focus on phasing it out completely. Now, the key talks at COP28 already have focused mainly on the dispute of the financing of the transition into a greener economy, as well as the fossil fuel controversy, of course. And that's been a key point of contention as well, is how this green economy will be achieved without damaging the country's economy. Many economies are based on fossil fuels, at least, and the kind of process of phasing those fossil fuels out may be dramatic for certain countries and more dramatic for other countries. And so that's the key issue to talk about, I guess. But that's all to talk about on this article. Keep your eyes on it, of course, as the story does develop and we do come to the end of the COP28 conference. Next to talk about, though, is the EU in relation to AI. Now, Macron has warned that landmark EU legislation designed to tackle the development of AI risks could hamper European tech companies in comparison to rivals such as the US and the UK. And now he focused his concern on the fact that the new law means the EU would enforce the toughest regime on so-called foundational models, which underpins AI products. Now, generally and most recently, when we've been talking about these AI products, which have been very important indeed, we've mainly been focused on products such as ChatGPT and the OpenAI, kind of parent company, I guess. But mainly when we were talking about that, we were actually talking about, the issues within the leadership. Obviously, we had the issue of the CEO being ousted by the board and then the board being replaced. And now we're going into this new kind of period where, the corporate structure of that entire leading face of the industry is being changed and restructured. And so we're kind of in this interesting time where AI is this new developing industry, and it holds great potential, obviously, as we've seen with these billion-dollar valuations for these key startups within the industry. And we've already seen the effect of these new AI companies on industries around the world. But ultimately, it is a very new industry, and it does seem that this EU legislation is working in a way to make sure that the risks of AI, which have been highlighted by many individuals, including proponents of AI such as Elon Musk, people have noted these risks, and it does seem the EU is the first to act on it. But with that, of course, regulations can hamper that development. And in this new industry where you have many competitors, such as this article notes, with the US, UK and China, you do have that issue of, if you implement that regulation too early, before you understand the limits of the industry, you can hamper that innovation for no good reason. And so that's the real tough decision to be made here. And Macron seemingly is on the side of no regulation for the moment, or at least not in the way that it's so-called being enforced by the EU. Now, Macron cited the case of Mistral, a Paris AI startup valued at €2 billion, and warned that the French were leading European AI business, and they were neck and neck with the Brits and just behind the USA. Not just behind. He in fact said miles behind, or something along those lines. This is important to note as well. If the EU is already only just neck and neck with leading nations such as the UK in the industry, and miles behind other kind of competitors within the US and China, is it really wise to start implementing heavy regulation and heavy new legal kind of challenges, which may risk this AI industry within the EU from developing, and as a result, leave the EU behind? And so this is something that Macron is making sure he makes note of, so the rest of the EU states, I guess, take note of. Now, the act has not yet been ratified, but the AI Act, will be in the process of being ratified over the next few weeks, with France, Germany and Italy all in early discussions already about changes or preventing its passage altogether. Now, the Act would impose new transparency requirements on AI models and restrict the use of facial recognition technology, which would come into force in early 2025. So not that far away with this kind of new regulation come into its use, but that said, it wouldn't be instant as well. But as we know, the EU, when it does kind of implement these landmark regulations or acts or policies, we do end up seeing this kind of mirrored across the world sometimes, even with a lot of the regulations forcing companies or certain firms to change the entire ways that they do their production or process, and therefore that affects the entire world. We've seen this with the production of phones and that sort of thing. But will this happen with AI, or will it just stunt the EU's kind of development in relation to the industry? And that's the real question to note. And if it does stunt the EU's development of this industry, then the EU could really get left behind. And many have noted the fact that AI could be the new internet, almost, in the way it revolutionizes the way that we use the way we access products, the way we use products, and the way the global economy is structured. And therefore, if the EU is left behind in this, the EU could be just another step back, or miles behind even, in relation to the world's development. And so that's the real issue. Now, firms that fail to comply with the legislation face fines of up to 7% of global turnover, and this could also risk firms not even wanting to involve themselves with the EU as a result, as it does risk the rest of their global turnover. And that said, on the contrary to Macron's points, the President of the European Commission, which of course is the executive body of the EU, praised legislators for the political agreement on AI rules, saying last Friday the AI Act transposes European values to a new era. So, that's a point to be also made, is this something that's very important, very much needed for such a an infant industry, and something that's very much required to prevent the risks from developing. So keep your eyes on this as the AI industry does grow. But that's all to talk about on the articles. Next to talk about, of course, is the charts. Now, we've spent some time on the charts, on the articles, but of course the first kind of asset to talk about on the charts is US indices, with the first being US 30. Now, the US 30 has been trending to the upside, but as we noted yesterday, price had stalled going into the end of last week. And so yesterday, when we were kind of looking ahead to the whole rest of the week, we were commenting on whether the US indices would make a run to the downside from their period of consolidation that they were in, as we can see here on the US 30, or in fact, would they make a run to the upside? And what it does seem to be the case for the US 30 here is that price was able to break above those areas of resistance where price had been ranging, and price is now pushing further to the upside. The question is, of course, however, how far can price really go, and will price retrace before it continues further? As we do know that price often does come back and retrace from those previous areas of resistance, using them as support before price moves further. So that's the key thing to note on the US 30, I believe, at the moment. Obviously, we haven't seen too much upside movement so far, so it's hard to say whether we're at the top and therefore be able to draw out this 3820, this Fibonacci retracement tool, but it will be interesting to see where price does go, so keep your eyes on this. Next to talk about, though, is the dollar, which we did also note yesterday had recently come into contact with this previous area of resistance or previous high, which price had moved down from, and price has seemingly come into contact with it once again yesterday and failed to really break above it. And that's interesting to note, of course, as quite possibly we're forming a strong area of resistance here. This is an area where price had previously come up to as well, but really the key area of resistance that we previously noted was this area, because of this area previously being a strong area of support for the dollar. But it does seem that this is a new strong area of resistance for the dollar, and price is failing to break above it. So it'd be interesting to see whether we will now see once again another sell-off by the dollar to the downside, or in fact we'll be able to break above this area of resistance and liquidity. Next to talk about, though, is euro dollar. Now, euro dollar we spoke about yesterday in reference to the fact that price had finally come down and tapped this strong area of support and liquidity that we had previously noted many times as an area which price should come down to before maybe making a run to the upside, as price had been on the downswing since the end of November. Price did come into contact with it, and currently we are sitting just above that area on the charts, as we can see here. That said, we haven't seen a significant push away from it. So what does this tell us? Well, we're not quite sure here. We could look to the RSI to maybe get some hints, but even the RSI isn't providing much of value. But the fact that we haven't seen much momentum in the move away from it, quite possibly this means that this won't be a strong bullish move away. That said, we have now tapped that liquidity, so the chance still is there that price now will make a significant move to the upswing. So keep your eyes on Euro USD. Next to talk about, though, is pound yen, which obviously did make a great crash last week on Thursday in relation to yen speculation. However, coming into the end of the week and now yesterday, price did make a significant retracement to the upside. If we draw out the Fibonacci retracement tool, if that's of any value, we could note the fact that price is currently sitting around the 50% Fibonacci area. But that said, it isn't really coming into contact with any too significant area. If we look back on the charts to previous areas of resistance that we've noted, we could start talking about this area, but how strong this area will be as a matter of resistance or liquidity, that's very much arguable. So keep your eyes on this, as so much volatility is in the market for pound yen at the moment, and also USD yen, that it's hard to decide where price may go, or what levels price may interact with in a kind of clean manner. So take note of that, and I guess proceed with caution. Next to talk about, though, is Bitcoin, which has in fact taken a bit of a move to the downside, a bit of a crash to the downside, and quite a retracement, I guess. Now, we'd mainly been talking about the 3820 as a potential area for price to come into contact with before a continuation to the upside, as Bitcoin's been on the upswing recently. However, price did break below that area, in fact, in a sharp downturn, and actually come into contact with the 50% Fibonacci level, where there has seemingly been a significant move away from. So whether we now see that significant move to the upside from this area, that will be interesting to see. But it does seem that price is coming into contact and reacting to that 50% area. So keep your eyes on that. Next to talk about though is gold, which has now hit the 78.60 Fibonacci level. Obviously, most recently on the Sunday, we did see gold make a significant move to the upside, make new highs never seen before for gold's price. However, we did see that sell off from that area and a significant move to the downside recently, and therefore we've now come into contact with the 78.60 on the Fibonacci kind of retracement tool, and that's very much in line with a strong area of liquidity that we've previously noted. So it'll be interesting to see whether price does make a move from this area, or in fact we'll continue to see that move to the downside. So keep your eyes on gold. But I think going into this week, the most important thing in relation to gold and the dollar and US 30 and even the euro is the economic data coming out this week, actually including the pound as well, because we will be receiving the Bank of England's interest rate decision and other kind of key data which will be coming out in relation to the euro and the dollar as well. So that's the key thing to note this week in relation to the charts and going into today on Tuesday. Next talk about though is oil, which is kind of on a retracement to the upside now. We had reached the minus 100% Fibonacci extension level coming into the end of last week, but now we are seemingly on the retracement up to the upside. What will be interesting though is whether we come into contact now with this previous area of support. As we have noted previously, oil does tend to react to these previous areas of support as resistance. So maybe we come up, we test that area, and we continue to see a sell-off. So it'll be interesting to see how price works itself out. Keep your eyes on that most definitely. No seemingly key areas on the Fibonacci chart to note in relation to that area. Maybe the 6180, but we'll see. That's all to talk about on the charts though. We're taking quite a bit of time, so let's move on to the economic calendar where we have quite a bit of data coming out today. Now, firstly, we will be getting British unemployment data. Very important, of course, to understanding the way the Bank of England will shape its monetary policy. So as that, we're getting Eurozone economic sentiment figure, which is being released along with the German economic sentiment figure. So listen out for that. As well as that, we're getting the US inflation rate figure. So very, very important data that will be driving the whole perception of the Fed's monetary policy. And going into the Fed's last meeting of the year, it'll be interesting to see how this inflation rate will react. How the markets will react to this inflation figure in expectations for the rhetoric which we may hear from Jerome Powell in that meeting. So listen out for that. Predictions are 3.1% for just the normal inflation rate. Next talk about though, we will be getting the Japanese manufacturing index figure along with also the US monthly budget statement. But that's all to talk about on the economic calendar. We've covered a lot on the articles, lots on the charts, and now lots on the economic calendar. Hope you have a great trading day this Tuesday, but that's all from us at Wildwood Capital. Have a great one. See you. Bye.